I'm here to talk to you about some ways that you can make it a little easier for yourself and make it a little easier for your staff and also get some sort of ROI out of this. So, and I'm all about interaction, so please feel free to say something. But have you guys recently had questions from your auditors about internal controls, something kind of newish, perhaps in the last year, quarter? Yeah, okay.
What do you mean by newish?
New versus previous years. Have they started asking you more about your internal controls documentation versus other periods or years? Something they kind of just started to bring up?
Only if there's internal changes like personnel or whether or not we can cover operational things sufficiently to make sure that we are in compliance.
Got it. Were they asking those questions 3-5 years ago?
Our auditor was, yes.
Good. Okay. Okay. Well, for those of you who had it new, it's because SAS 104 through 115, some new legislative standards have come out that require internal auditors to look at internal controls as part of their audit. And it was actually it's been around since 2006. It was officially adopted by the PCAOB last year. If that's not English, what that acronym is, I'm not going to tell you because you can keep living not knowing. But in any event, it's now something that is involved in the day-to-day lives of all auditors. And so it's something that they're going to start asking you more and more about. So what we do is, and I'm going to go into a lot of detail about that, but basically what we do is we come equipped with the best practice internal controls, predefined by process, so that those typical controls that everybody needs on a day-to-day basis are already figured out. So you don't have to spend months and months trying to document internal controls about it. I'm not going to go more into that, but to that extent, that's essentially what we're about. All right. So your internal controls are everywhere, and my focus today is only going to be on the financial internal controls, not operational. So you can have operational controls around uniforms and marketing materials and things of that nature, colors in your logos. That's not what I'm talking about. I'm talking about pure financial controls, like how much money is in your bank. Is it correct? Internal controls around financial reporting follow somebody. So if someone's ever asked you, what's your internal control around whether or not this decision's been approved and you can go ahead and use this color in your logo. If an auditor is asking you those kinds of operational controls, that's your job to steer them back into the financial control perspective. I'm laughing. I presume you have experienced this.
How about getting a new auditor instead?
That's always an option.
Yeah.
I'm sure Christina would talk about that. But in any event, there are internal controls, obviously within accounting, HR, IT, inventory, you name it. But again, my focus right now is just on the financial controls rather than operational controls. There are a lot of benefits of internal controls, and I know some people don't even think that that's a possibility, but it is. There are, and one of the biggies, perhaps, for this crowd is going to be the lack of IRS scrutiny. You really only want your IRS agents to be there in a very short amount of time. Come in and go, get happy. And so to that extent, if all your ducks are in a row, you can accomplish that. If you're having to try to remember about that journal entry you posted 8 months ago and trying to find support for it because your IRS agent or your auditor is looking for that particular item, and your ducks aren't in a row, your documentation isn't solid, it's going to take you longer to try to figure that out than it would have taken you if you had just done it right the first time. Fair enough? Sounds rational, yeah. So the biggest benefit I can see of internal controls is the lack of a surprise. I always say this: if you find an extra $1,000, if you find an extra $100,000, in my case I found someone an extra $250,000, that is not a good thing. It's kind of like Christmas, but at the end of the day you have to think, where did I go wrong? And to that extent, you may have had the opportunity to utilize that capital in a previous situation where now you couldn't, you didn't even know you had it. IRS and auditors aren't like that. They might give you a hard time about it. So risk prevention is a team effort, you guys, and that includes everybody on your team. And to that extent, some real concern, fraud is always a surprise, and it always happens with that person that you think is not, you never expect. And it's always the case. So some real concerns about this group, I would assume, are segregation of duties issues. You may have, a lot of you said you have volunteers, which means you may have that core group of people who are, employees if you will, and then you have volunteers to make up for the rest of the stuff you've got to do. Well, in that case, your core group may be relatively small, and you only may have a few people who are able to actually handle the cash, or you may have a lot of people who handle the cash. So do any of your volunteers actually handle cash for you at events? Yeah. Have you ever given them any sort of policy and procedure about how to handle that cash and how to properly give it back at the end of the day and all that kind of thing? Awesome. Okay. And the goal there is only a proven internal control in that regard is only just to say you started with $50, you collected $100. At the end of the day, you're giving us back $150. And it sounds simple, and I'm not trying to play down the importance of it, but the point is that internal controls define the process so you can actually have accountability, and that way people can understand what they're supposed to be doing. So in these statistics here, the 97% was primarily consisted of payroll and check tempering, which again isn't a surprise, but yes. Okay, so these steps are common to any company I've ever done this for, and it's a very simplistic way of looking at the process of defining internal controls. Can you guys hear me okay when I move back? Okay, so you start off with the risk assessment. Has anybody done a risk assessment before from a financial perspective? All right, a couple people. That's an analysis of your balance sheet, income statement, and any disclosures you may have. You set a materiality threshold, so you say, what level do I care? It's kind of like if you find that you reconcile your bank statements and you find out, you're $5 off. You go, If you find you're, $500 off, you might call your banker and try to find out what's going on. Risk assessment says, where are your risky areas within your company? Then you document controls that prove you've mitigated the risk to those areas. You document the controls that are around that show you've mitigated the risk. Then you prove it. You do some testing. I'm going to go into these in detail, but you do some testing to say, okay, we did our risk assessment. We determined we're paying out a lot of money, and that again, a lot of money is a subjective calculation for every single company in this room. It's not across the board. You're paying out money. You've got a control that says only certain people can sign checks. That's your control. You do your testing to say, okay, is there any check stock missing? Are those people who are supposed to be signing checks? You need dual signatories over a certain amount. Are they actually doing it? That's the testing, and you don't have to test 100%. I'm going to go into that more, but you can just do a statistical sample to prove it. Your external auditors are going to come look at it, and then they're going to give a report. And this is just how it goes every year. And it's not expected to end anytime soon. So it's been around for a long time. It's expected to be here a long time from now. And so if you look at it from this perspective, it can maybe help make it a little simpler. So again, talking about the risk assessment, your auditors actually do this. This is how they make a determination of where they're supposed to audit. The new standards say you have to do a risk-based audit, so they're going to look at it and say, okay, I know AP is in scope. I know, financial statement close, for instance, is in scope. But is fixed assets in scope for everybody? Probably not. Is fixed assets in scope for everybody? So to that extent, what you've got is a situation where if you participate in helping to define the risky areas of your company and actually prove you have controls mitigating that risk, you test them and give them that proof, then that can help them do their job, which effectively will cause them to work less and could have ROI thereafter here. So that's the intent of the risk assessment. Now, Ingrid has said, talking about the internal control situation and how a whistleblower document retention policy is the whistleblower line in the documentation retention policy were 2 required points. Is there anybody in here who needs that? Like a document retention policy? You do? Okay. Come see me afterwards, I'll give you one. It's always easier to edit a policy that's already created than to start from scratch, and I have a nice 7-page one you guys can just keep on and call your own. So, in any event, you document your controls, and that can be very laborious. I get that. People think, you look at documenting a 6-page policy, so I'm going to take the next month doing and trying to figure out how it applies and such. And that's where, for instance, a firm like ours is really handy because we come in and we have those common controls already figured out. Documenting controls around how you make payments. That your time can be better spent documenting controls unique to your organization rather than spending the time documenting controls common to any industry and any company funded. I do this all over the world. Our products are in different languages, and I can tell you AP is in China, Spain, Italy, here, doesn't matter. In the audit arena, unfortunately, as a former external auditor, reformed, we consider everybody basically to be guilty until proven innocent. And so to that extent, if you help them get to that conclusion by doing your own work, then you're going to, again, have the ability to reduce the fees that they're going to be charging you and actually have an understanding of what's going on in your organization. Many of you are board members, and many of you know you have personal liability associated with that role. That's scary. You're signing your name to the fact that things are going well. If you look at these are some pretty gnarly statistics, and you know, a lot of people, especially with Sarbanes-Oxley public companies, they have an assumption of compliance, or they have assumptions that their internal controls are working just fine. For instance, of the 94%, 2006, 94% of the people who got qualified opinions from their auditors, when Sarbanes-Oxley first rolled in for public companies, the 94% had given themselves a clean management opinion the quarter before. Does that make sense? So they assumed that they were just fine, 94% of them, and then they weren't. So to that extent, these are real statistics. Your auditors want you to prove it. So, you know, and 990s are essentially asking you for control support, so it shouldn't be a shocker of what you need. Again, just get it organized, document that, avoid that personal liability. This is funny. Okay, I have a real question though. What is the role of your auditor? What do you guys think it is? Do you think it's a management tool?
It's a third-party endorsement of your health.
Exactly. A lot of people say, you know, the auditors are another arm for management that says, you know, I can get them to help me get through my day, get through my audit, those types of things. Your auditors are subject to reviews themselves. Being an auditor is a privilege, not a right. So they're subjected to reviews, and they have independence requirements that says that they're not allowed to audit their own work. So if you've had your auditors, especially recently, say, you know, if you ask them for help and they say, well, why don't you give it a shot, and I'll come back and see how you did. They're trying to kind of tell you in a nice way, well, I can't do your work for you. So exactly right. They're out there, unbiased third parties saying, you know, you're supposed to do all the work, and I'm supposed to see how you did on it. Think of it like the teacher. They're the teacher, you know, your organization is the student, you're trying to get a good grade. People like us, Vibato, we're sort of a tutor. We kind of help you get to where you need to be. You guys want to invest in Bernie Madoff's latest venture? Why not? Has a bad reputation? Exactly. So to that extent, though, it's a very small world in the nonprofit arena, especially in North Bay. I mean, this is where I live, so I mean, I know it's a very small world. And those negative opinions are often made public, and that particular amount of press may follow you other places you decide to go. Likewise, with someone who is very strong in this type of arena, if you have a particular CEO, CFO, you know, accountant, controller, whatnot, who has a very good sense of internal control, internal procedures. I think it was Christina who was one of our out-of-the-box things, said you might be able to, you know, subcontract out your resources to other nonprofits. That's a serious potential. You have someone who's good at it, you might be able to subcontract out that person to another nonprofit and have nice, you know, income stream from the fact that good procedure, good practices, a well-run business is something that actually is not that hard to do, but often it takes a special kind of person to give it that sort of focused effort. So, you know, the point is to avoid the reputation loss. And also the qualified opinion, or that fifth bullet in the wheel, where the external auditors do the report, the qualified opinion where they say something you don't want them to say, is avoidable.